Hey, what's up, everybody? This is Chef again, and we're doing the weekly watch list today. All right, so hopefully everybody's having a great week and enjoying those profits on some of those puts, and some of you who swung puts, congrats. Great week ahead, right? All right, hopefully everybody can hear me still. Earlier, but it's all good. All right, so let's talk about ES. Where are we? What are we doing? And where are we going? Technically, we don't know where we're going. All right. So all we got to do is focus on the chart and what's in front of us and to see if there's going to be some type of direction for a day trader or for a swing trader, right? That's our job. It's to manage risk overall. What we do have here is this trend line. Okay. I know a lot of people have the 200 SMA or EMA, whatever it is, that little indicator that says it's the 200 moving average. It did touch here around that 43, 30, 50 area. We didn't touch the 43.50, but I know a lot of traders were watching that. And it's important because a lot of investors look at that as a market either rejecting or changing trend. But regardless, no matter how you see it, we are still on a downtrend in general. All right, so that's the downtrend that we are in currently. On top of that, we do have this nice channel coming on down, which we've been in all year. So that's kind of like what we've been doing. But remember, we do get bullish moves. Okay. We do get these bullish moves that do happen. So you can't take away from the bullish side either. You got to learn to play both sides, right? And sometimes we as traders, speaking for myself as well, we get a little biased and we like to buy the dips because we're bullish, because we see something that's at a great price point or whatever the case may be. But so far overall in the whole market in general, we are uptrending. All right. So there's nothing to take away from the huge uptrend. But either way, we're right here, and this is all we care about. We don't really care about this level down here because we're not down here yet. Most of you guys who day trade are in a trade for like 15 minutes and then you're done. Some of you are in within like 30 seconds. You buy with heavy contracts and then you sell within like the next like 10 seconds. It's a matter of understanding why you're getting into a trade and what you're looking for into tomorrow, right? So we do have a bearish reaction here. Okay, that's the sentiment now, and it looks like it's changing trend. It's not that it's changing trend, it's that it's respecting its trend. The trend currently right now is still bearish. So overall, you're probably going to make more money to the downside right now versus you are the call side. I don't think buying calls right now is the wise thing to do, but definitely not opposed to it. What I'm looking for here is basically the 50% retracement of this, and I'm also looking for a accumulation or a supply to build, whichever one comes first. What do I mean by that is that these levels right here, so I'm going to use these two candles right here. So I'm going to use this red one. All right. And then I'm going to use this piece right here. So this red candle here that stalled. And then this one was the old demand from a previous drop, and the doji inside, and then these two candles here. So what I really want to see is that 41 to hold. Okay. That's it. So kind of like, let's do something like this. I'm going to move this over, just slide it over just so you guys can see what I'm going to talk about right here. This is what I want. All right. So whether this candle goes red, becomes a wick, whatever it does, I don't care. What I want to see is this to just build candles here. However it does, whatever it does, that's where I want it to build. And you can see that I brought it all the way down here to this specific trend line. And the reason for that is because we are in a trend line, and because we did hit that 200 EMA or SMA, whatever it was. Most of you guys will know if you guys have indicators. I wanted to build some accumulation here in the next couple of months, right? Maybe a couple of weeks, maybe next few candles or whatever. And the reason for that is because I would rather see a cool off in the market versus a straight run up or a straight run down. it's a lot more healthier when you see accumulation do something like this. Okay. When you see that, that's when the pop happens, and then that's when you get that nice staircase pattern to the upside. But like I said, right now we're taking it day by day, and we're not too worried about what's going to happen right now. What I am expecting is accumulation in this area for this market to just kind of cool off and to digest everything that's happening with China, the inflation, the recession, the outcome of this next quarter, like the results of the stock splits, the innovation from these new stocks on how they're going to survive through inflation that we already experiencing. So we're waiting for that. So if we can just hold 41 as low as this wick right here, which is like 40.80. 40.80, I think we should be okay here for the market to just kind of hang out. Okay. This is based on the weekly time frame. All right. So now what I'm going to do is I'm going to go on the 4 hour and show you exactly what levels I'm going to be looking for, kind of like I just gave you right now. We did gap down overnight. Well, we did experience a nice sell-off, which is kind of nice. A lot of people have been wanting a nice sell-off, and this is like that little pattern that happened on last week. We kind of created a little pennant here, and then we just dropped. All right, a lot of other people have, this trend line right here, so it aligns perfectly well with that little pennant. Now, we did come back and retest, which is awesome. We're right now at a retest level. We are also at the expected move. If you guys don't know what that is, I'll definitely bring up another video when it comes to that. So we're retesting this whole move over here, okay? This is why I said that 40.80 is kind of like that low level where we may see some buyers. So if you guys are looking to buy the dip sometime this week and we go super red, it would be that 40.80 right here on that blue line. Basically, this yellow box is where I'm going to look to start to buy calls and look for things to slow down versus breakdown. So I'm kind of just being patient on my trades, and I'm going to wait. It's all a matter of waiting for that specific trade to come your way, right? Either way, right now we are still downtrending. It looks like there's more red than green. A lot more volume came in, and if you guys don't know what volume is, usually when there's a sell-off in volatility, a lot more volume comes into the market, which is like the new normal. All right, so low volume is the old normal, high volume is the new normal. So make sure you guys understand that, okay? And all right, so we're going to be looking for 41.20. All right, so the downside, if we continue to break below this specific level, that 41.50. Right now we're at 41.44. So still look for 41.20. 41.20, look for 41.05, and then 40.90, and then 40.80 would be the area to look for a dip buy sometime this week if we get down there. Otherwise, just make sure you're riding the trend to the downside. And we're going to look for some accumulation down at these levels right here specifically, all right? The accumulation, because of in the past, we accumulated, and then broke up. We got to come down and retest. If we accumulate and break above again, then we'll be back into testing that trend line once again and looking for the trend to continue to the bullish side. Otherwise, I'm going to continue bearish until we hit 41 and look for a nice dip buy, right? Now, the one thing and the one indicator that I do have that's going to tell me that this market is going to drop down is Apple. Apple is a very strong ticker, a great name, well-known name that doesn't move as much anymore, but carries a lot of weight in the markets. So no matter what's going on in the world, Apple is kind of like the leading indicator right now as to more sell-off or a nice retest for a green day. So I'm using Apple because it carries a lot of weight and it has a lot of sentiment. And the fact that we're close to these all-time highs on the weekly time frame is kind of crazy. All right. Last week, we closed on this type of candle. If you guys don't know what that is, please search it out. I'm going to leave this blank for you guys to go search it out and understand what kind of candle that is. So I did end up taking puts on the weekend on Friday for today. Took profits today of like 65% on Apple, which is nice. And then took a day trade and then took another swing trade today. Why? Because of that candle, because of the close on Friday, because we broke this nice little trend here on the smaller smaller frames right here. So broke the little trend on Friday, came down, retested, broke down, confirmed downtrend, confirmed downtrend today. We broke this trend today on the 4-hour, created a doji right there, and ended up with a red one. So I'm expecting these levels for Apple to hit 166.50, and then the bottom right here, 163.50 area. So looking for that. If that continues to drop even further, I'm going to look for 160. I am in a swing, so I'm going to make sure I manage properly and make sure it doesn't go above like that 170 level. If anything, tomorrow we can adjust and look for that retest. So kind of looking for a retest candle to do something like this. And then if we are continuing bearish, this is what we'll see. That's what we'll see to the downside. But this candle would have to be green in order for this to be a healthy break of trend and continuation. Otherwise, if it just continues to sell off aggressively, it'll create more volatility in the market, and then the sell-off will begin to take place tomorrow. But either way, I'm ready for both sides, right? You got to be ready. So this is my leading indicator. On top of that, what do we have that went that gave us direction for the downside? The VIX. The VIX actually gapped down pretty nice, gapped up pretty nice all the way into that 23. It even hit the highs of this like 24.60 today. So the volatility is here. And this is why we say that when the market sells off, a lot of aggressive volume comes in, which makes it look like it is normal, which is not normal. Volatility is not normal, guys. I'm telling you now. We've been experiencing volatility for the past like couple years because of COVID and because of inflation and recession. So the volatility has came in aggressively a lot more than it did 3 years ago. Right, sorry, 5 years ago or 10 years ago. And it's just increasing in more and more and more. So the volume, when it's on normal volume, it looks like it's low, but in reality, it's normal. But again, the new normal is high volume. So when you see the VIX go green, volatility kicks in, it's normally because we're selling off and a lot of people are getting stopped out on their position. The next thing is the dollar. The dollar keeps going aggressively to the high, so which is not good for the markets, okay? That's another thing to take note of. And again, I'm gonna leave this one blank for you guys to go ahead and do some DD on this. The other thing is the 10-year, the bonds. If you guys don't know that when this thing goes green and it's pushing green, I must say that like 80% of the time, tech is usually red. So if this has a nice green day, expect tech to be red and to struggle to push to the upside, which is NQ. All right. Now, the other thing that I want to talk about is /CL. This is the crude oil. So I did tell you guys last time that once we ended up experiencing this doji here, we experienced that nice downtrend. And I said, these levels are going to be hard to break. All right. Going over 120, I did go back in the charts and we went back like max years. We hit these all-time highs and we hit supply. All this level is supply. And the aggressive move just went parabolic. So now they're bringing it back down. This was the current trend that we talked about. And these are the two levels that I'm still waiting for to hit for a opportunity to dip buy on oil. But I think right now that the way that it's moving on the 4-hour, this may have found a bottom. The reason for that is because it's bringing a lot of buying pressure from the oil tickers like XOM, Oxy, CVX. Some of these tickers are actually trending up. So XOM, Oxy, if you guys don't know, Warren Buffett did buy tons of this thing. And then the other one, CVX. And then we're watching these trend up, okay? Just because those trend up doesn't mean that /CL will be green. All right, so remember that. This goes per barrel, so you guys make sure to do some research on that as well. This thing may have found the bottom, and the reason I say that is because of the aggressive volume that came in today. The volume today from these wicks basically confirm, if you guys can see, this is a massive wick from 89.60, from 86 to 89.60. It's a huge wick on the 4-hour. Once we start breaking this 91 right here, we're going to look for a short-term uptrend. All right. So I'm kind of looking for this to curl. So you guys don't know what I mean. This is kind of like what I'm looking for, like that. So for oil to start trending up. If you guys don't know how to trade this, trade USO. Okay. There's a couple other ones like UNG and JNUG that you can trade. These are pretty. Oh, sorry, not JNUG, UNG. This is the natural gas too. You can trade these and XOM and Oxy and CBX. You can trade that, but mainly USO. If you trade USO, it's kind of cheap. Here you go on the trade tab. So look at the September 16th. They're only about $3. If you get a little closer on the 9th, they're $2.50, $2.20 for September 2nd, or just weekly contracts are $1.50, which is not bad. Okay. But yeah, I'm going to be looking for an uptrend here on oil if it decides to go up over 91, target of 94. This would be the target 96, and even back up to 100 in the next couple of weeks. So I would look for this right here. That would be your target if we break 91. All right. So be aware that oil is still on a downtrend, and if we break and hold 91, we should be okay for a short-term bounce to 94. And then just trail it on the way up, 96, 97, 98, all the way to 100, okay? That's the way that you guys got to look at oil. Another thing I want to point out is RTY. RTY is at a good spot right now, as you guys can see this nice little downtrend. Somebody somewhere is going to draw this. Sorry, checking my messages. All right, so this one has the best risk to reward to the upside. And the only reason I say that is because at the level that we're at right now, here you go. Here we are. We're basically at a demand right here. So using this like 19 as a stop loss and a 1906 as entry and 1920, basically where we're at right now. I want to make sure we hold and build a couple candles here before we start to trend back up. And the retest of 1980 and 1960 would be pretty nice. So I'm going to be looking at RTY into tomorrow. There's a couple tickers that I have in mind, and I will share with those right now. So because of RTY, one thing is we are going to look at JPM. If you guys remember JPM we talked about last time, and we actually took it for some swings here. All right, we got in right here. We got in right here, and then we got in on the breakout again, and we swung it all the way into these 122 levels right here, and we took profit right before we ended up hitting the 124. So the target hit. Okay, that was the whole plan I gave you guys last time. I said if we do break above this supply, we're gonna come in and hit that 124. So it'd be a nice swing for you guys. This one I think it hit like over 200%, which was pretty amazing. And then now finally we're right here at this level again, retesting. So this is why I'm looking at RTY, because XLF gets the sentiment from RTY and some small cap tickers as well. So the small cap tickers, healthcare, and some financials are all tied into it, which we do get that sentiment. So if JPM does break above and hold 117, this is going to be my confirmation to start going long again into the 123. I'm going to be looking for call plays. Now, if we fail and we start trading below 116, I am not touching calls. All right. Over 116 is going to be considered a breakout play and a continuation of the retest in general. Okay. At 116 and below, I am not touching it until we get down here to this 112. All right. Very, very simple concept. Here's your entry, 117. Below 116, do not touch calls. But I am going to be looking at the pre-market levels for JPM. The next ticker is going to be DAL. DAL, oddly enough today, after a nice run up on this specific trend, we ended up breaking down right here. Okay, we ended up breaking to the downside, and we have a nice wick right here for DAL. So that's what catches my attention today. So even with the red markets in general, I like to look for tickers that have wicks on the bottom. When you have wicks at the bottom in the red markets and you close real tight, it usually entails a lot of buyers stepping in. So the buyers that came into here, basically retesting this level, can show some strength tomorrow over the pre-market levels, right? So what do I mean by pre-market? Whatever the pre-market is going to be, that's what I'm going to wait. But in general, as of right now, 32.50. Well, sorry, that 32.40, 32.40, 32.45. This is the level that I want to break above in order for me to go long like that. Okay. If this thing drops, it's very clear that this is your base. So that 32.20. For right now, these are your levels. All right. So 32.40, it's going to be a long into that 32.80 and 33 potentially. If it drops 32.20, you're just going to look for a continuation to the downside. Remember, we need RTY to be on our side, and we need to have like a green futures. All right, not a lot of sell off, not much pressure, but definitely a good range day. Okay, so that's going to be the trade for DAL into tomorrow. All right, the next one that we're going to talk about is, all right, so that was shop, DAL, Apple, and JPM. Shop, man, this one got me last week. Last week, very, very good. I tried trading calls and didn't go my way. As you can see, what happened? I don't have to tell you anymore, right? Either way, regardless, what I like about Shop today is that it did close right here with the indecisive candle and the 4-hour candle. All I'm gonna do tomorrow, literally whatever the pre-market is, I don't care where it's at, I'm going to go up, break above or break below. That's it. It's a very simple concept here because there's indecision after a huge red day, and we're heading close into this demand. And if we do hit this demand down at this bottom, I am definitely going to be looking for a buy opportunity here for some contracts with some longer time. And I'm going to chill on Shop. My stop loss is literally going to be right here. So my risk to reward is pretty amazing if you ask me. So whatever brings tomorrow, break above the pre-market, break below the pre-market base, whatever comes first, that's the direction that I'm going. That's it. Very simple, right? Not much rocket science to it. Just make sure you set alerts in the morning and kind of at open, make sure you go and check it out. Let's talk about XOM real quick though, because a lot of people are watching this bad boy. This one is actually setting up real nice. So I am waiting for the break of that 95.30 level. Other than that, I'm not touching it. I think there's still a lot of hype behind the Warren Buffett Oxy buying shares. So I would rather stay away from that and wait for the IV to cool off on some of those oil tickers and wait for a proper setup, because I don't want to enter and then tell you guys that there's a lot of hype behind it, that it held, that it looks bullish because Warren Buffett bought it. I'm not here to give you that perspective. I'm here to show you that I would rather wait for a specific setup versus trying to trade the hype. You guys feel free to trade the hype, but just make sure you come out green, whatever you do. So 95.30, I am going to go long, and I'm right all the way to that 97 and 97.50. That's my plan for XOM. Otherwise, I'm not getting in. Good luck if you guys trade calls and buy the dip. Good luck if you guys have swings or leaps on it or shares just in general. Whatever you do, be careful, manage your risk, and make sure that you're following a trade plan specifically with a good setup, and now allowing that to get your bias just because Warren Buffett bought something. Okay. I mean, I bought Starbucks, but nobody cared, right? This is where I bought Starbucks, by the way. But again, nobody cared, and the stock didn't care either. All I know is that I bought a good dip, I bought a great company, and it's for an investment. So I would rather buy the dip and just kind of hold, right? But yeah, that's kind of what's going on with the market, guys. There's a lot more in the stock market that you guys can trade. There's tons more setups, but I want to be specific with what I'm trading, and that's basically looking for those Apple puts. I am in the swing trade. I am going to be looking for JPM retest for this to actually hold. Looking for DAL, whichever way it decides to go, and then Shop as well, whichever way it decides to go. And the risk to reward on these are pretty great, and you can trade it basically on any account size. These contracts are not that expensive, especially if you're grabbing weeklies. Like look at Shop, they're only $1. Max 130 for the 33 calls. It's like JPM, I believe it's around 120, 130, 140. I got close. And then Apple, of course, is very cheap as well. Yeah, they're only $1, so not too crazy, right? So yeah, I think there's still a lot of good stuff happening in the markets, guys. So just be aware. We are still in a bearish trend, okay? And whatever you do, don't buy the bottoms, okay? Make sure you short on green candles, but manage your risk properly. So that's kind of like the overall this week, guys, and be aware that Feds are speaking sometime this week again. Speaking on the GDP again, confirming that we're probably still in a recession. All right, nothing's going to change unless they say that the numbers have gotten better. Then we may shoot to the moon, and everything that I just said is just going to go out the window. And I'll see you guys at 43.50, right? But yeah, day by day, guys, be careful and choose your trades wisely. All right, stay green. I will see you on the next one, and good luck.